Yo people, what's good? Welcome back to the channel. Hope you're all doing well. Hope your trading's going well as well. Obviously we're on the verge of very difficult price action. There's just a lot going on. From a geopolitical perspective, from an economic perspective as well. You've got conversations about tariffs. You have conversations about war. Israel, Gaza, Russia, Ukraine, China, Taiwan, most recently America, Iran. So there is so much going on. Sometimes I feel like what happens as traders, we tend to focus on more of the eye-grabbing headlines as opposed to I guess more of like the internal stuff, like the actual individual pushing the buy or sell button. So that's what these set of videos are going to be about. I really want to take the onus back to and place emphasis on the trader, me, more specifically. So I have certain things within, I guess, my trading career that I actively want to work on. I've been conscious of it for a very, very long time. And obviously this is the first time that I'm making, these type of videos about it. And hopefully, we can keep it consistent and, we can make real improvement as a result of these videos. So what I really wanted to focus on was my lack of discipline in regards to my ability to journal. It's always kind of been my weakness, I guess my kryptonite to a certain extent. I feel like it's really important from the perspective of being able to, one, hold yourself accountable, but most importantly, being able to learn from your mistakes. You don't really want to be that guy that keeps making the same mistake over and over and over again. The learning curve can be cut so much shorter when you journal because you're way more privy to the mistakes that you make, and it's just something that's there. Now you're present, you're aware of it, as opposed to, you just not being aware of like, particular issues that you might have in regards to like your ability to not risk manage, or issues that you might have in regards to how impulsive you are or the volume of positions that you take, or issues that you might have in regards to like your lack of technical prowess, for example, or fundamental prowess, if that's something that moves the needle a little bit more for you. So yeah, that's what I really want to focus on. I really want to focus on my ability to journal, and what these videos are going to be. I'm going to journal every single one of the positions that I take. So if I take a position, I'm making a video about it. I'm talking about it. I'm talking about the justification behind me placing that entry in the first place. And then I'm ultimately talking about, I guess, any lessons that can be learned from that position as well. I don't want to read too much into it and think there's a reason for every loss, because sometimes I just feel like a loss is just just one of those entries that's part of the sequence of trading. You're gonna win some, you're gonna lose some, and it's just another number in the game of probabilities. So I don't want to place detail on every single trade that I place, but I do want to get to a space where like this is something that is consistent. This is something that is an absolute non-negotiable. I don't want to be able to. I don't want to, lose um, desire to journal my positions because of how tedious I find the task. I want this to be something that I resort to in every situation, regardless of the day, regardless of the situation or external stimuli, for example, regardless of what is going on, I am journaling everything that I take. And I guess that's the point that I'm trying to get to. So yeah, with that being said, I started a new account today. Um, yeah, let's get straight into it. So I guess what I'll talk about I guess my thought process coming into the start of the week, because I do think that's important. So coming into the start of the week, I was actually bullish DXY. not for the long term, but near term. So for Monday, more specifically, I wanted to be bullish DXY. Um, and more notably, I was looking for bullish entries on USD JPY or USD CAD. Framework being the disrespect of this weekly volume imbalance here that we have here. So the two dashed red lines is the volume imbalance. So previously a level of resistance. So you can see how, for example, this candle came into the volume imbalance, fully filled it, and we got rejection. We had this candle here that closed below it, and then the candle from the start of June, where we also came up into about the midpoint of the volume imbalance, and then we got a decent amount of rejection for that week's price action. Last week's price action actually saw us uh, disrespect this space as an area of resistance. We closed above it, and so what I was looking for coming into the start of this week, I wanted to see price return back into Friday's range. So this candle also consists of Friday's range, so I wanted to see price pull back into it. You'll see it a bit more clearly on the daily, but I wanted to see price pull back, and then I was looking for price to ultimately come up into this daily fair value gap here. But this is obviously a level that we reached even without, coming down in a bit deeper into where I wanted to get an entry from. So my idea was actually invalidated, but I felt like it was important for me to say because that was the original idea that I planned for on Sunday. And so as a result of like my profit objective already being met without me even getting an entry in, what I was looking for as a result of that, one, I think is important for us to note that we had this gap here as a result of, the way that we opened up this weekend. We had this gap here. Gaps are naturally always primed to be filled. It almost acts as a magnet towards price. So price is just naturally inclined to want to fill these areas. That's something that I took on board. So when I came in during New York, what I highlighted was this 4 hour fair value gap here, and then this long blue line is the open of this candle is the bearish 4 hour order block. So I extended that out in time. We tagged that particular point of interest during the start of New York, and what I was looking for in the beginning was how did price react in this space. So as soon as we came into that space, we actually started rejecting, and that's kind of what prompted me to go into the lower time frames. And also because of the inefficient price action that we got with the heavy displacement from when price opened in Asia to obviously Monday's London session range, a lot of inefficient price action there. And so I felt like there was definitely strong grounds for a retracement, and the risk to reward parameter was kind of clean as well, to be honest. So yeah, a kind of a good framework built on the 4 hour. I took it down into the 15. The most relevant time frame after that was actually the 5 minute. 5 minute more so because you could see the break in market structure, one, and you could also see the inversion fair value gap as well. So it's important to note that obviously this area here was an area that was supported by price. So price came down into this 5 minute order block here. So this is the 5 minute order block. Price came down. We got this displacement up. So this area here was used as an area of support, but we broke that area. So after we broke this area, I set a sell stop a bit below that. just to, as extra confirmation that we are actually breaking down. I had my stop above the almost the volume highs of the start of New York session. So it was about 22 pips. And then my target was the first initial target was previous session's low. So I highlighted the low that was put in during London. And it was ultimately just going to be the next PD array. So the next relevant PD array would have been, I guess, this order block here. And obviously you have the weekly open. The next PD array would have actually been the fill of this volume imbalance here. But to be honest, because the risk to reward parameter was already okay, one, I didn't feel like I had to hold it that long in order to pass this challenge, but also I think this is, really important to note in regards to the state of affairs with, prop firms now. A lot of these prop firms don't like you passing their challenges in one go. And so I actually cut the reward aspect a bit short, so I put it in at 4.5 RR. And so that I risked 2% on this position. I felt comfortable to do so. And that netted me around 9% or just over 9%. So I've only got about 1% to pass. And so overall, I felt like it was a good trade. I journaled it, so I've got it here. Let me hide this because this is previous data. So the entry was at 12:41. Very simple journal. Sorry. Obviously today's date. The session was New York. The pair was USD JPY. That's the entry, stop, TP, exit. The risk amount that I put on the position, the risk to reward was 4.5. The gain was 9%. This was pro trend because overall, for me, USD JPY has been selling off, especially the last quarter. So that's pro trend for me. And the setup, this is important for me to add as well. I've got a breakdown of kind of what I look for in terms of price action. So I've managed to break it down into 3 ideas. I try not to focus too much on continuation trades. So I actually really just want to primarily focus on reversals or retracements. So this idea was kind of broken down into setup B. So setup B is a retracement idea, and this basically consists of either external range liquidity being taken out, or a higher / mid time frame reference point is tagged. So in this case, that PD array, that reference point was the 4-hour bearish order block. And then what I wanted to see as a result of price coming up into that reference point, I wanted to see a clear desire for price to return back into the range. So I wanted to see a rejection. We got that. Obviously, if you have a look here on the lower time frame, it's very clear that we started rejecting as soon as we came into that 4-hour order block. We was in the New York session. We broke below this fair value gap level highlighted in purple. So yeah, it was quite clear that this is a level that we could look for in terms of targeting lower price action. We got the market structure break as well, highlighted, delineated by the red line. So yeah, overall I felt like it was a decent position to take. I also kind of broke this down within my daily report card as well. So this is again something that I want to do if not every day, at the very least every trading day. So every time I take a position, I'm doing my daily report card. I do feel like there is definitely benefit to doing it every single day, even when you don't take trades. Because, for example, like you might want to basically you might want to highlight a situation where you had a trade outlined and you didn't take it. I think it's important to note down the reasons why. So so yeah, ultimately the goal of my daily report card, this was to eliminate impulsive trading. So for you, for example, like you can make this relevant to, I guess, something that you're concerned about within your trading. It could be your lack of ability to follow risk. It could be your your the volume of positions that you're taking. It could be the fact that you're not following your strategy, for example. So whatever it is that you feel like your issue is, I feel like it's really important to kind of pinpoint that and then ask yourself certain questions um, to allow you to get to a space where you're actively trying to work on that thing that you've highlighted as an issue. So yeah, I've basically said the solution to my impulsive trading, uh, complete a full higher time frame pre-market analysis before every trading session. So I've done that Sunday night. Determine what the daily bias is by breaking down what PD arrays are being respected. Again, I've done that. What relevant fractal highs or lows have been rated. And then from a framework perspective, it's really important to me that any idea that I build, I'm building it from a 4 hour perspective and higher. I don't even give myself permission to go into the lower time frame without me having a higher time frame idea present. So if that higher time frame idea isn't present, I'm not even going into the lower time frame. So again, this is something that allows you to eliminate impulsive trading because like the lower time frame, there's a lot of noise if you don't have higher time frame context. So yeah, had a look at the economic calendar. Pre-market higher time frame analysis was done. Didn't do a review on Saturday, but I done one on Sunday. And then yeah, just a number of questions. Did I take a trade today? Yes, I did. Was it something that fit in your model? And then again, as per the breakdown of my frameworks, it did. So we had a position that came into a higher time frame reference point. It was tagged, it was respected. And then essentially what I was looking for was to see clear lines of a rejection. And then I wanted to see disrespect of opposing PD arrays. So I guess in this case, what I wanted to see was a disrespect of bullish PD arrays, which we got because we broke below this fair value gap. And obviously it being inverted acted as a strong level of resistance, pushing price down. Where was I? Why did I take the trade? I mentioned that price came into the premium PD array during New York session for our bearish order block. Upon reaching this point of interest, price showed a clear willingness to break lower. Lower time frame bullish PD arrays not respected. This prompted me to sell. So very simple. And then some more questions. Again, this is for situations where you might not have traded on that particular day, but it's still important to ask yourself these questions because again, that can be a moment that you can learn from. Next question was, did you manage your impulsive behavior today? I said yes. I mentioned that only one position was taken. The position was taken with a clear higher time frame framework that was refined onto the lower time frame. The idea was in line with my strategy, so it allowed me to fully accept the risk being taken. So that is good. And then a grade. So I gave myself an A minus. Um, Reason being, I do actually want to slowly phase out New York entries. So as much as there are opportunities provided in New York, ideally what I want to do is I really want to focus on London session, and then those entries that I get in on during the London session, um, what I want to see in the future are situations where those trades can remain open. Uh, and so what I want to use New York for is mostly just like management, just to manage positions. So if there is an opportunity to fully carry a position through New York, I will. And if for example, like you get situations in this case where you got heavy displacement up for USD JPY, uh, and then price rejected. So in this case, if it was a position that I got in on during New York, during London, I would have broke even. So I really just want to use New York to just carry momentum as opposed to actually looking for entries going forward. So yeah, I felt like it was an A minus, but overall, like, I didn't think it was a bad position. And yeah, just to show a breakdown of how it broke down. And then yeah, that's current price action. We've also disrespected this volume imbalance as well. So there's a strong possibility for a continuation down, and I think that's also kind of in line with like where we are fundamentally as well. And I guess just like from an economic and geopolitical standpoint, it kind of makes sense for capital to flow out of the dollar and then flow into more like safe havens. So like the golds, the silvers, situations like that. So yeah. Again, interesting breakdown. Let me know what you think. Um, I'm gonna try and make these shorter. I think for the purposes of it being the first video, I kind of felt like it was important for me to just blabber on. But yeah, I'm gonna try and make it like a lot shorter. Let me know what you think. Anything that you want me to include. Um, yeah, let me know. Let me know. Feel free to like, subscribe, share, tell your friends, and we'll catch up when I take another position.